Spider ETF stock video, and this is your weekend edition for Friday, the 14th of October, 2022. What a week. Wow. CPI, PPI numbers, and both hot. That's how I look at it. Both hot, which means the Fed goes for 75 basis points minimum on the November 2nd meeting. It would take, I said this before, I'm going to say it again. For me to think it'll go anything less, you'd have to probably have a tactical weapon, nuclear weapon, go off that Russia uses in Ukraine. Barring that type of action, and that's because world markets would come to a standstill. Could be the end of the world. You don't know what's going on. Barring that, 75, could be 100 basis points because we have some more economic data yet to come out. And maybe the Fed just says, because I'm watching each governor that comes out, they are beyond hawkish. I don't find any moderation in them. So why not go bigger and get this thing done? All right, you know, we're all looking for where the market peaks and start showing that it can have a trajectory down. There is a difference between a peak and falling. You do understand that. Markets can peak out and they stay there. The Fed needs two parts, and that's why people that say they're going to pivot soon, they don't know what they're talking about. You have to go up, then prove that you're going to go into that trajectory down, and somewhere along the line, that 6.3% core CPI has got to meet up with an interest rate that gets above it. I know everybody tries to define neutral. In my brain, which is limited in its scope, I happen to think you have to have interest rates above core CPI for the Fed to back off. Now, it could be a guessing game as the two come together like that. That's very possible, but they won't be far apart when they do that because the Fed will bet properly that in order for it to keep coming down, to look at all the data and they see the trajectory is there and just the way that it's going up and it's stubborn. Once it starts falling, it ideally will stay stubborn until it gets to that sticky point. And there's always a point on the core that gets sticky. And the reason is, unlike the headline numbers where the gasoline and the food costs are in there, you got your rent and other items that don't move so fast. So pay attention to that. All right. So when we look behind us, we had a, 900 point rally basis, the Dow yesterday. Today you gave back 400 points of it. What went on? That was called a flash rally. You always hear flash crash. Why can't that call that? It was a melt up, a flash rally. Okay. And the reason they're called flash is they come out of nowhere, and that one did. But did it? I'm going to repeat something. If you learn the technical tool that's my favorite one, called the Bollinger Band with the slow stochastic, it gives you an edge in the market most of the time. Is it going to be there every time? Nothing works all the time. But the Bollinger Band, mathematically, you will only settle under or over the band 5% of the time. Nothing is going to change that. It's how the algorithm adjusts. And when you tie momentum into it, it gives me an indication where I no longer want to play. Yesterday, I didn't want to play. You hit Bollinger Bands on the daily charts, the lower ones, all over the place. I didn't know a 900-point rally was coming. In fact, I'm shocked it happened. I said it yesterday. I'm going to say it again. I don't know why the market rallied that much yesterday. It's got to be algorithm trades. I can't think of anything else. And if you bought it late in the day, you're caught. Maybe. Maybe I'm wrong. That could be the case. When I look at Tesla, I don't know. You're coming into a key area here. I'm not a fan, but I wasn't a fan up here. Why? What did I keep saying? Over and over, I told you, I said, I'm looking at all these fabulous new cars come out. The Lucid from car. Then I'm looking at the new Cadillac, the other ones that are all coming out. Everybody's got a new electric car that's phenomenal. Kias, all them, they're beautiful cars. Don't get me wrong. Tesla's got a big lead and a loyal following. The problem is they've had no competition. Everybody, did you hear the word? Everybody's coming at them. And they're going to do it at price points that puts pressure on this market. I'm not the only one seeing this. Competition lowers what you can get for your good. If you're a doctor with a certain knee replacement and you're the only guy that has this phenomenal titanium joint, we have one of these in Chicago, he can get whatever he wants. But if you're going with the off-the-shelf one, it's different. Now Medicare's got to get involved in different ways. The guy here, and I don't have anything wrong with my knees, I have buddies that have had it. He wants only cash. You worry about your insurance with it. Well, that's not Tesla's game anymore. It was. It was up until a year ago. And that's when the market started having its problems. In 2022, the beginning, as all these other car manufacturers are coming on, that's it. Then the blunder that he made of buying Twitter, okay? It's $44 billion. I don't care what it's worth. It's a blunder in this environment right now. Did he know this was going to be the environment? If he did, he's probably the smartest guy in the world in business as it is, but I don't think that he saw that coming. Will it turn out to be a bad bet? I doubt it. Will he have to possibly sell Tesla stock to complete the deal? Well, that's weighing on the market, isn't it? Because bankers are this. Bankers are wonderful when you don't need money. They're the ideal friend because they want to give you money you don't need. As soon as you need it and you go in and the markets turn, that great friend of yours, you don't even see him cutting his lawn. He's sort of hiding. You know I'm right. I've been in business and had things happen. I've been in this thing. So what is happening here is that's all weighing on this stock. The stock is in a downtrend. By any definition, lower highs, lower lows, bear trend. The market is under key moving averages. You've had a bearish crossover where the 18-week got underneath the 100-week, opening the door for a potential test. Yep. 156.11 is a possibility on the downside. Why? Because you're already at the Bollinger Band. If you crack through that with any verve, you open up the next $50 down there. Where's the resistance? Back up at 265 to 264. Momentum still to the downside. And remember, I don't look at overbought, oversold on weekly charts. I do on dailies, hourlies, others. Not this one. It's too big of a ship. It doesn't just hit it and turn. That's the problem. You get up there and you lumber around. Could they embed? Yes, but you typically don't. How many of these do you see on the chart where they embed? That's my point. They're there. I'll play them when they're there. I certainly would tell my subscribers about that. But more times than not, this is what you do. So can you keep dropping to this number? I don't see why not. But would I ever tell a trader to go short at or under a Bollinger Band? No. Flat no. There's ways to do it, and I teach it in the course. In KBE, okay, you have just fallen to the 200-week average. What is the equivalent of a 200-week average? Let me think. Oh, simple math. I forgot I did go to grammar school. 4.5 years, roughly, right? Oh, my God. 4 years. Oh, my God. 50 weeks. Oh, yeah, 52 weeks a year. It's about 4 years. Oh, my God. I figured the math. That takes a while. That's your battleground. If it gives ground here, 42.24. Is the market in an uptrend or a downtrend? It's fighting a battle. It's nothing. XLI, downtrend. Again, battleground. You went to the Bollinger Band area, you bounced. Because you got underneath the 200-week average, it becomes resistance on the way up. Now it has to make up its mind what to do. Momentum down, bias down, trend down. If the market breaks from here, wherever the Bollinger Band comes in, it's currently 80.17, the next target. Is the market a short sale here? Well, not for me. I want it to be embedded. I'll wait. In XLE, lower low, higher high. There's no trend. What I think is going to happen is the Bollinger Bands are going to wrap their arms around this energy sector a little bit. Here's the thing that's going on. The Saudis have made their cut of 2 million barrels a day. On paper, it's really probably 1 million barrels a day because of how you have to redress those that weren't producing. The Biden administration can talk to them all they want. The Biden people should take a gun and shoot, including the president himself, in the foot. Why? All they had to do is let the Keystone Pipeline go through and we'd have another 1 million barrels a day. It would be running already. But under them, that's not what we're going to do. So we put ourselves in this situation. The Saudis, OPEC Plus, Russia, they did not put America in this position. America put America in this position. Do we understand that? Very crucial to understand. We are the most fortunate people in the sense with an economy like ours, we are close to self-sufficient in energy. We're not there. We have to buy blends in order to get what we've got. We're lucky. Unfortunately, shale oil requires new drilling all the time. You're not getting that. Be careful. Those wells don't last like the deep wells that the Saudis, Kuwait, and other countries have. Nothing like it. And if you think you're quickly getting away from fossil fuel, you just had your wake-up call. You're not. That does not mean that we shouldn't be going with solar and wind power and more nuclear. I am a proponent of nuclear energy. We have the technology to make it, especially in America, very, very safe. All right? There's always a potential for a problem. It's worth it to be energy independent in areas. You don't build them in highly populated areas. You figure out where you're going with them, what's the way to do it. I understand, I think it's Sweden is going to redress it now, going back to it. You have to figure out what you got to do to survive. Easier to turn that off, cleaner if they don't go bad. I mean, Japan can tell you stories about that. But as we look at it, that's where you're pretty much at right there. Uranium, okay, talking about nuclear. I knew what I was leading into. Still bearish. Why not go to the 1749? I'm bearish. I think the pros are selling this. Stop should be right up here over the 2153. I'm looking for wherever the Bollinger Band is for the first objective. GLD, I'm bearish. How could you not be bearish gold? To me, this is candy. Why? Because I got, for my 2-year note, I'm over 4%. Okay, what do I make on gold? Nothing. The dollar. Because the dollar's so strong, it keeps foreigners from buying the gold that they want. India, the hoarder and all. Their economies are hurting just like ours are. People can't buy as much. That weighs on it as well. That combination's deadly to the gold market. It's already proven war doesn't mean anything any longer to gold. As long as it's not on U.S. shore, it doesn't mean anything. It's crazy, but it's true. The second thing is inflation story doesn't work on gold if the dollar is this strong. That's the big if. We've had inflation without the dollar this strong. This is unique. You've got that double whammy. I didn't see that coming, but it's here, and I understand what we have. Now, gold can easily come alive if the dollar makes a top. Easily, because inflation's not going to go away 1, 2, 3 around the world. That's not going to be the case. But that's not where you're at right now. So I think the bears are still hitting the market. I think now the resistance is the 200-week average. And I think that the 18-week is going to try to get down to it in the next month or so. In the gold miners, I don't have a clean trend. I have a lower low, higher high. Nothing to do. ARC. You do realize the low of this stock's $14.67. The market is knocking on the lows of the year. The People's Party in China's coming. Traders are scared of this thing. You know, all China's got to do is not make any real modification. Why is this going to hold? I mean, American companies are running. They're not walking out of China. They can't run fast enough to just move everything away from this country. So as much as the innovation there used to be great, it's not. But that's not all that Cathie Woods invests in. She invests in technology that will change one's life. It's not necessarily China, believe me. The problem is there's a time and a place for that. This is not the environment for breakthrough technology. If you think it is, look at Meta. They just came out with their new goggle. Take a look at what the stock did. That gives you an idea. Let's talk Apple. Apple just came out with the iPhone 14. Let's look at the stock. It's not lifting it. That's the argument I'm making. There is a time and a place. This seems to me a stock that's very out of place. Speaking of Apple, And I love my new Apple phone. You know, I told you I'd get used to it. I'm still learning it. My God, it's so different than my 10. And my wife has a 12, so I know the 12, but it's different. Still bearish. Could be going right where we talked. I thought it would go closer to 130. I'm not too far off at this point. And I told you had to get away from these double-digit PE ratios. This is the stock that when it gets into an 18, a 17, whatever it is in the PEs, the market, you're going to hear everybody talking on television. They've capitulated. They've come down. Now the market's going to look better. I agree. It's the last holdouts, the big boys, when they come down, you start looking. Tesla, because we covered it in the front, I won't cover it here. Twitter, okay. So I told you that my few shares that I had bought, I got out of, and the stock's about where I got out of it, okay. It's all about, is he going through with the deal? If it does, it's going up another $3, $4, and that'll be the end of it. If it doesn't, I don't think it's going much under 30 anyways. So we'll see what's going to happen. TLT, is this not just honed in and locked in for you on this part? Come on, learn the Bollinger Bands, learn the Gorilla Glue that I teach. Once you lock in, you embed. That's what it generally forces, and it just keeps feeding on itself. So real rates probably going up, and I knew that was coming. That's the news that I work with. So you keep hearing me talk about this. I want to change, at least, and leave with you one thing that I think you'll look at over and over: stocks, ETFs, futures markets, real estate charts. If you can apply this indicator, and you can, to a chart that you just bring the data in from, just about every charting service, you can import the data. You're going to have something. Take a look at this, learn. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.